Welcome, Ashwin. Thank you for joining me again on our online chats.
Thank you,
which
Jessie.
seem to give me such insights over what's really happening in the markets. You know, my banks have never explained things to me the way you do. And I'm amazed at your depth of knowledge and how you make meanings of all the trends and sieve through all this information to make profitable ideas and investing opportunities. So thank you again for being with us. Now, today, I want to pick your brain about what we now call the new economy. In everyday life, we see this manifesting as electric cars, drone technology, 5G, blockchain, and of course, Mark Zuckerberg's latest Meta. So I'm keen for you to share your perspective to our audience.
Thank you very much, Jessie. I'd like to tell everyone watching this video, the pandemic actually has been a blessing in disguise. The pandemic accelerated the new economy. And today we have very exciting things coming up, and we are lucky to be alive in this era. Last night, Facebook changed its name to Meta because they're coming on board with what we have been waiting for and anticipating, and it's called the metaverse. The metaverse enables you to go inside the internet and to experience a new world of talking, living, eating, dancing, and at the same time wearing designer brands in virtual reality. All you have to do is wear a pair of goggles called the Oculus, and you will be in the virtual reality, virtual world of augmented reality and actual reality.
Mind-boggling.
Yeah.
Mind-boggling, but at the same time, rather scary, no?
Well, tomorrow we will be doing a video on this subject on the metaverse. What is the metaverse? How do they create it? It's created by high-speed computing. It's created by special coding and software, which I'm going to touch on this in a minute of what's happening in the semiconductor world. So looking at it, I'll come back to it to say that with this new economy, we have things like metaverse, things like electric cars, things like cryptocurrencies, blockchain, decentralized finance, telemedicine, anything that you can think of. Once the human beings learn to code, everything is possible. Today, we have companies selling insurance on the internet with just an app. So with this new economy, a whole new range of possibilities has emerged to make money for the average investor. And that's why we are so excited to help the retail investor make money so that they can experience all these things and really go ahead and make their lives better.
So what about conservatives like me who've been schooled, or rather old schooled? You know, we don't want to be obsolete. So how can we jump on the trend and ride the tide? Of course, we need experts like you, and that's why I love to have you on the program.
So that is why we come in, Jessie, because if you look at the traditional banking system, it's very simple. They just want the people at top. They want $3 to $5 million. They tell you to buy their products. They have nothing specific for you. They just put you in the products and say, okay, we'll give you 5% a year. Those days are gone.
I was at the back of the line, so I didn't get this kind of bespoke, customized relationship that you and I have.
So here, Jessie, for just $5,000 for holding your hand, we are giving you bespoke service. We are giving you a profile plan that's suited to your risk-reward ratio, what you can afford, what you cannot afford, and what is your requirement, what is your appetite? Are you here to gamble? Are you here to invest on a slow manner or fast manner? We do everything for you for a fee of just $5,000 US.
I can't help comparing the banking and the remisering, you know, and the scalping culture that I was attuned to. And I was like forced to like take out quickly for your little, you know, a few dollars here. And now I feel I'm so much more self-assured. We're looking at longer term. We are looking at really investing in good names. And I know I'm making wise decisions.
Yes,
you
correct.
know? So I feel compelled to share your expertise with as many people as I can.
And let me give you an added advantage that we have that the banks don't have. We have an algorithm called human quant that is 75% machine and 25% human. When you go in the run-of-the-mill bank trading system, they don't have an algorithm. They depend on their research department, human beings. Here we are guided by an algorithm, and this algorithm is our master plan. It guides us. So for 5,000 US, you are getting bespoke service, holding your hand, listening to you, crafting a plan that suits your lifestyle, your nature, everything that you like to do. And at the same time, we have a machine on top telling us what is right, what is wrong, and what is going to happen. And let me add, our research is not what already happened. Our research is what's going to happen. So can you see, for a little 5,000 US fee for 12 months, we are giving you all this.
I know I've learned how to track the flow path of the price structure. Oh my goodness. I'm learning things that I never thought I could absorb,
Yeah, because Tessie, you never imagined about the dark pool, right? You never understood in the US market that the options market.
Exactly, and buying stocks at discount prices that I never knew could be available to a small retail investor like me.
Let me tell our investors or tell our viewers that number one, in the US stock market, if you're going to buy US stocks, you have to have options data side by side, because the options market moves the stock market and not the other way around. Secondly, you have to know what the big boys are doing in the private exchange called dark pools. This is where you will never know, because Apple could be in dark pool and people are buying 100 to 200 million shares, and that's when we come in to buy the stock, and we have access to such data. Okay, and number three, if you're an average investor with $50,000 to $100,000 only, there's a contract for different instrument that enables you to pay just 10 to 20% of the actual value of the stock. If Apple is $150, you only pay $15 per share. Okay, all this becomes exciting. Let me add, because we have an algorithm using a flow path software that tracks the price value of an asset class for 12 months. So we now know, for example, that Apple is at $150 right now, the CFD is at $15, and in the next 12 months, Apple will go to $225 US per share. So that's what our price flow path software tells us. So,
but there's so much noise in the market. How do we select what is right for us, and how do we ignore all the people, those people selling products and wanting to buy?
This is where we come in. We hold your hand and we decide when you buy and when you take profit. And
when to buy bonds, when to not buy bonds.
That is why we're charging you 5,000 US, because we will make the decisions according to your appetite, your requirement, and we will tell you what to expect, and we will tell you when to buy, when to take profit, and what to do. We are the ones who will look at the noise and say, this is noise, this is not. We decide what moves the market. We decide for our fee.
I was pleasantly surprised to have such an open conversation with you, an open network link with you. Anytime I wanted to have you clarify something, you would always call me back, and I really appreciate that. Now, but before that, I want you to talk more about this semiconductor that is now this leading edge technology, that I alluded to from the beginning. Can you say more about that? Is there an idea there that we can latch on to?
The semiconductor industry is now bringing in a leading edge, extreme ultraviolet technology that enables chips to become 10 times more powerful. There is a company which is making a machine that is using extreme ultraviolet technology to produce chips that can store vast amounts of data and do things faster. And this technology took 20 years to create, and the machine cost $317 million each. And for next year, we are already expecting orders at about 71 machines already. Now, why these chips are so important? Number one, these new range of chips are only 3 nanometers thick. Just to give an idea, the human hair is 2.5 nanometers thick. So with this kind of thickness, the speed of the chip goes up, and it can store vast amounts of data. And because of this, you can do things like advanced level high-speed computing, 5G, and artificial intelligence, without which we will not be able to progress upwards in these areas.
So it looks like it's on our buy list.
Of course. Now, if you come in as an investor, okay, we will tell you how to profit from this and only pay 10 to 20% of the actual value of the stock and make at least 20% profit from this semiconductor idea.
Amazing. So I just want to say that if I invest with you, I pay you the fee of 5,000 and then I put my committed capital in a bank or in a trading house, broking house.
I'll explain to you. First of all, you come in and you pay our fee of 5,000 US dollars. Okay, and you sign our contract. Okay, and then you open an account with a biggest broking house that trades CFDs. The biggest broking house takes CFDs. And let me emphasize, the money remains in your account in your name. We do not touch your money. All you do is give us the permission on paper, what we call LPOA, to give us the permission to trade for you. The profits are in your account, and you are free to withdraw the profits from your account whenever you are able to, or whenever you want to.
Now talk to me about risk.
There's no such thing.
Obviously, people will tell me, oh, it's very risky and you shouldn't go outside of a big name bank. And, you know, why are you trusting someone who's a small company?
Let me explain to you. There's no such thing as a zero risk trade. There's no such thing as a zero risk investment. That is why we call it risk management. We manage the risk for you. We compress the risk for you. How? Number one, we ask you, what kind of paper risk are you comfortable with? 10%, 20%? Number two, we have a criteria. We only invest in companies that have healthy balance sheets and strong product and service pipelines and little to no debt. Now, such companies go up in value every year by at least 10 to 15%, at least. In fact, our algorithm for 2022 has come out with the top 20 stocks that you can buy every year beyond 2022 and make money at least 20% per stock per year. That is the kind of confidence we have. So when you talk about risk, you see, when you buy a penny stock that is so unstable, that is risk. But when you buy a company like Microsoft, for example, and let me give you the real example, over the last 4 years, Microsoft has gone up 275%. So when you talk about risk, is that risk worth taking? I ask every year out there. When your bank says stocks are risky, ask them one question. What are you buying? What kind of stocks? If you buy a company like Microsoft that goes up 275% in 4 years, what risk are you talking about? So that is the kind of risk that we take, because we are taking confident risk, not just reckless risk.
At the same time, a stock doesn't move up in one straight line. It does.
Exactly.
One does have to weather the storm a bit.
Even the Microsoft, which is a top class stock that goes up 275% in 4 years, will not move up in one direction. So there will be times where you are facing a paper risk of up to 20% on paper, meaning the stock is 20% away from your buying price. But you know, at the end of the day, 6 months to 1 year, you will have a 20% realized profit. That is the big picture. When markets collapse, these are the kind of stocks that you buy more of, because the end picture is it will go up. But unfortunately, in today's fast-paced society, when the market drops 5 to 10%, people start panicking and they start cutting loss. Now, that is not the way we trade. Let me tell you how we are different from the banks, Tessie. We do not cut loss on a top-class company. We buy more of it when the market drops. We get greedy when the market drops, because today Microsoft is Microsoft. Today Apple is Apple. You have to understand the caliber of the company you're buying.
I am so appreciative that I have a stable advisor, intelligent financial information behind everything that I do. And I'm really, for once in my investing career, understanding how to be sure-footed and how to take back control of my own choices. So this is the sort of nugget you are the golden goose to me, and I want to share your contact with all my friends. So please tell us how to contact you, and then we'll be online again soon.
You flatter me too much, Tessie. I'm just a human being who came across a group of coders who understand what I need and who are able to combine my intelligence with the algo, with the code in technology, and they bring both ideas into one, and they give me what I want. We're not gods, but we are just fortunate that we have the right caliber of people who understand our ideas, who can execute what we want. Before I leave, I'd like to tell our viewers, we look at Warren Buffett and we say, ooh, ah, wow. I'm sorry, I'm not impressed. Today, if you have 100,000 US dollars and you can wait for 24 months, I can give you a taste of what it feels like to be like Warren Buffett. And that is my assurance to you. Because we have had investors who invest with us $3 to $5 million, and they have made 50 to 80% profit a year. They have, just like Warren Buffett style. But the thing is this, the catch is this. We hold your hand. When the market drops 5 to 10% as a correction, do not panic, because we know what we're doing. The problem is today, the market has gone up so high. If any time the market comes down for a correction, 5%, no big deal. On September 30th, the market dropped at a stage, a 6% correction for the first time in 227 days. The correction lasted for 2 weeks. We did not panic. We were buying more stocks between September 30th and October the 14th. The problem with investors is when they see a drop like that, they think, oh, market crash, market crash. That is immature and that is juvenile. And to us, I'm sorry to say it's pure amateurism. If we are here as professionals, we have to hold your hand and please give us a chance to show you our professionalism. Of course, to this I may add, we did not predict the virus, but we did tell our clients that this is not a financial crisis, this is a health crisis. So if you can wait for 6 months and bear the risk for 6 months, paper risk for 6 months, you will bounce back. And we were 100% correct. From March the 23rd onwards, this market started bouncing back last year. Okay, and nobody believed this because we understood the kind of Fed action that was involved. They were pumping in $120 billion a year to push up the stock market. But if you're an investor that's jittery and jumping and panicking, you will lose money in this market. But if you can decide on the level of risk, paper risk that you can take, please do not panic. Please listen to us. Please let us hold your hand. We're not gods, but we know the risk parameters that a normal person will not understand. With that, I leave all of you, and my email is ashwin@ppchk.net. We can be contacted on WhatsApp at bit.ly/algotrader, and you can also contact us on Telegram at bit.ly/algofactory. And please go to YouTube and subscribe to our channel, bit.ly/algowealth, where you can see all our previous videos.
Thank you, Ashwin. We'll be online again soon.
Thank you, Tessie. Thank you.